This article comes from The Motley Fool. Two electric vehicle EV stocks billionaires are aggressively selling, and one they can't stop buying. Through the remainder of the decade, EVs should be one of the fastest growing industries on the planet. A report released last year by Beyond Market Insights estimates a compound annual growth rate of 22.5% for the global EV market between now and 2030. 13Fs provide a snapshot of what the brightest minds on Wall Street bought and sold in the last quarter. Two EV stocks are being avoided, while another ultra-popular EV stock has recently been tops on their buy list. Can you guess which one they're buying? Alright, so the number one EV stock that the billionaires are avoiding is Rivian. Who sold? You got billionaires Philip Lafont and George Soros. This gentleman, Kotu, and Soros dumped 11.27 million shares and 2.02 million shares respectively. One reason top tier managers have been less than thrilled with Rivian is the company's shrinking cash pile. They had a bunch of cash at the end of 2022, roughly 12 billion, but they're burning about $1 billion a quarter. All right, so let's just go to the chart of Rivian. I mean, if you look at the monthly chart, it's just been straight down. We're going to go straight to the weekly, the daily chart. Price was range bound until it broke out to the downside. I'm expecting price to pull back to test the breakout before it continues to decline. Let's see if it can hit $10 over time. Nothing special about $10. It's already at an all-time low, but $10 is a round hole psychological number. All right, let's look at the next stock that billionaires are dumping. It's NEO. Now, Jim Simmons of Renaissance. This guy is a quant genius. He actually made more money than Buffett. Got Ray Dalio as well from Bridgewater Associates. Jim sold almost 2 million shares, while Ray sold 1.64 million shares. This pessimism surrounding NEO among the billionaire investors likely has to do with the ongoing supply chain issues and the lack of significant production growth. But here's probably the bigger issue. The other big concern is NEO's location. They are a Chinese-based company. China's zero COVID strategy, coupled with the potential to have its shares delisted by U.S. regulators, have made China stocks a riskier investment. So let's go to NEO. And I have a $6 target on NEO. Very similar to Rivian. If we go to the weekly chart, price just breached this range bound price action. Again, I'm expecting a pullback to the origin of the breakout before price continues to decline. Why was $6 my target? Because that was support, resistance, now support. Alright, let's go to the one EV stock that people are, or billionaires are buying. Can you guess? No other than Tesla. They seem to be buying hand over fist. So you got 7 billionaires buying up Tesla stocks. Never heard of Jeff Yaz, Keith Griffin of Citadel? Yes, I've heard of Keith or Ken. Jim Simmons again. John Overdeck, haven't never heard of him. David Siegel, never heard of him. Stephen Cohen, I heard of him, of Point72. He owns the Mets. I believe he got caught up with some trading fraud a couple of years ago. And then this gentleman, Israel Englander. The likeliest reason for Tesla to shine bright, according to this article, is its 3 consecutive years of profits. But these billionaires are thinking longer term. These billionaires investors are probably also anticipating a big ramp up in production. Got the Berlin factory, got the Austin, Texas factory, which came online last year. And then Tesla keeps talking about their gigafactory in Mexico. I also think that Tesla is best positioned to ensure that they have the raw materials, the metals, to make the batteries for their cars longer term. So let's go to the Tesla stock. Okay, I've had countless videos on shorts on Tesla. You know, one can say you have this head and shoulder pattern. Now, in recent weeks, price is coming off of a major support resistance line. Could it retrace the entire move up from early January? Well, if this is the neckline of this head and shoulder pattern, you take the difference from the top of the head to the neckline, and then you put that line at the bottom of the neckline. And that's how far price can fall. Now this happens to be below the 2020 pandemic highs. Wow, that puts it into perspective. Tesla was on fire for the last couple of years. Now, people are expecting the stock market to drop another 30%. So, that would not put Tesla at $40. But could it retest the buy zone at 105? It's quite possible. On the weekly chart, there are no buyers until you get down back to this level at 105. Let's just go to the daily chart. Can price fill this gap? Most certainly. If the market declines 30%, which is quite possible because the Feds are going to continue to increase interest rates, and that's going to increase the probability of a recession in the second half of the year. So I'm going to move this line down here to, say, 150, as that is the next target. Okay, until next time.